Okay, guys, so what I'd like to do is just start with looking at a lecture here. If I can find the lecture. The gist of the focus here for this, for Chapter 2, is to take a look at the types of funds. Now, one thing that is unique in government accounting is we're dealing with various funds. Now, various funds are going to conduct certain types of accounting transactions. The big governmental fund, the general fund we hear about, is going to be where most of the transactions are going to occur. A couple pieces that are important. There is no equity in government, is there? It's called net assets or fund balance. There is not equity like there is in a for-profit company because nobody owns it. And assets equal liabilities plus fund balance, not plus equity because there is no equity. Now, the reason we use funds in government accounting is to provide accountability to the monies. So each fund is going to be restrictive as to what transactions occur in each fund. It allows the activities to be separated amongst themselves. This is a key sheet here. There are 4 types of governmental funds. Now, we do have proprietary funds and fiduciary funds, but for purposes of the governmental funds that we're going to be spending a lot of time talking about, the general fund, the special revenues fund, the capital projects fund, and the debt service fund are the 4 funds that use modified accrual accounting. The fiduciary funds also use modified accrual accounting, current resources. The proprietary funds, think of them like this. Think of them like for-profit accounting. For, normal accounting you're familiar with. There still is not an equity. It's still going to be fund balance. But the enterprise funds, which would be like an ice arena, where they charge services or fees for an ice arena, and they're not trying to make money, but they're providing a service where they collect fees. Another example would be a utility fund. What if there's an electric company that's part of the government? They're collecting fees from the citizens, and so they're going to use that full accrual basis of accounting where you have assets and you report them. The other funds, the governmental funds, there may be assets. They'll go buy police cars. But for the fund purposes, not the government-wide statements, but for each fund, we don't record assets like we do in for-profit accounting. For-profit meaning cost accounting, intermediate accounting. When we in intermediate accounting purchase a police car, what do we debit? A fixed asset automobile, and we credit cash. Okay? Technically. In fund accounting, we will have as a debit a capital expenditure, and we credit cash. We use this word called expenditure in fund accounting, and we're going to talk about it. In these government funds, we don't use the word expense, we use expenditure. Now, in our proprietary funds, we're going to use the word expense because we're doing the full accrual basis of accounting. So we're treating that just like you would treat your for-profit courses. So you would say auto expense, for the gas and fuel. You would have a fixed asset for the, if let's say in a utility company you have assets there, big time assets. But for purposes of governmental funds and the fiduciary funds, all we care about is money's in, money's out, okay? That's the focus on that. This next one, we're focusing on these 4 types of funds. Okay, let's see. Now, the general fund, guys, this is the primary operating fund. This is where most of the services are performed out of. The police department, when you